In the midst of a pandemic with the money printer on overdrive, housing prices across the country exploded. Phoenix homes up 32.6% on an annual basis. Tampa up 30.8%. Dallas up 27.3%. Everyone talks about inflation, and almost nowhere was it most evident the past 2 years than in real estate.
Case-Shiller housing index is still running above 20%. Nationwide, that's not just hot markets, that's everywhere.
Rents have been going through the roof. Home prices have been rising at unsustainable levels.
The average buyer is priced out of the market, left paying exorbitant rents, while high earners and real estate investors with deep pockets are increasingly the main buyers.
We have an affordability crisis in the United States, and I would say COVID actually revealed and exacerbated an existing crisis, but it's only gotten worse.
These market conditions are compounding wealth concentration as younger people with less means are increasingly unable to enter the housing market, while the wealthier asset owners get richer and richer. But who's to blame?
The Fed's really created a huge housing bubble, and they kind of have to get out of the housing market before that's going to correct.
The housing sector is just another asset class caught up in the Fed-driven everything bubble as interest rates were artificially lowered to near zero. Easy money came pouring in. But the problem with bubbles is they burst. And as interest rates hike, the housing sector has been taking a massive hit.
In America, we worry about the price of gas and bread and everything except housing. When home prices go down, it's a calamity.
The Fed used to not invest in bonds, but in 2020, they decided to get involved in the mortgage market.
This year, home sales have dropped for 5 straight months by over 5%. And with higher interest rates, mortgage payments have almost doubled.
Housing is a very interest-sensitive sector, and higher interest rates, really interest rates that move back toward a more normal level, should act to cool off the housing market over time.
The Fed's so-called soft landing may look more like a wrecking ball to real estate if interest rates keep climbing. But therein lies another dilemma. Turning the money printer back on would reinflate a bubble even bigger, making homeownership even more out of reach for millions of Americans, especially young ones, leaving a fork in the road of our current financial system in which both paths lead to more problems.
What's the problem with the inflation rate in housing being 19%? It's an awful problem for a 22-year-old that's starting their first job, that's saving money to buy a house. But it would be characterized as a benefit to society by a conventional economist who would say, well, asset values are higher because of interest rate fluctuation, and now the economy's got more wealth.
Bitcoin just flips that whole thing on its head. It says we're taking inflation to absolute zero, which in theory would mean a society running on a Bitcoin standard benefit in nearly infinite ways.
The years of monetary expansion and low interest rates bidding up the price of real estate have turned homes into the main family savings account, a savings account based on credit. But what if there was another way for the average person to save money without losing purchasing power over time and without having to become a real estate investor or stock picker just to break even? What if a house was affordable for the average person with a modest income?
We're going to demonetize all the physical property in the same way we're going to demonetize the gold. You still need gold to wear. I have a gold ring on. You still need property to live in, but the value of the property should collapse to the utility value and not carry the monetary premium.
So everybody thinks their house always goes up in value, and they've never asked the question, would my house go up in value without $185 trillion of stimulus over the last 20 years? The answer is simply no. Houses would go down in value or stay constant.
In other words, what if Bitcoin fixes this?
Bitcoin is the ideal money. So if I decide I'm going to sell my second or third investment property and buy Bitcoin with it, the demand for investment properties should decrease, so the price will come down. And so that means that if you wish to buy a first home, it will be cheaper for you.
We hope you enjoyed that report. Please make sure to like and subscribe to the Swan Bitcoin YouTube page so that you don't miss out on any hard money content.